Hi everybody, myself Murugan. Happy to present another interesting video from EQSIS. In this video, I'll be talking about a very interesting stock selection criteria using a fundamental factor like a price expectations versus the quality of the company. So we will be explaining things in three phases now. So what you will be getting at the first one is the concept. So how you can compare the price expectation versus the quality of company. So we have to see the factors which acknowledge the price expectation, and we have to go through the factors which talks about the quality aspect of the company. And then we will get into some real world examples, so we can use some companies which are actually traded with the current price and current business model, and we can see which company suits in which quadrant. Either it is good to buy, not to buy, wait to buy, or good to sell. We will see those factors as well. And we will also be giving you some interesting quiz, so that it's not going to be just 15-20 minutes of watching a video. Rather, you can go and apply them in practice. The first objective of the quiz is to make sure that you get a chance to read in the video. The second one is to make sure that it streamline your stock selection process. I hope you will find it very interesting through this video. So how do we select a stock for a longer term perspective? Two major factors. If you ask me, the very first factor is the quality of the business. Because when you look at the quality aspect of the business, and then you can at least have a peace of mind. If not today, one day it will be in the show. So you get some peace of mind by approaching the quality. But the word quality looks very great. But how do I justify the quality? What are the factors comes in justify the quality? Wait for a while. We will make sure that you get it very interesting in this video. But the very first factor is the quality aspect of the business. But remember, if the quality is very high, then eventually the price tends to be very high. By any chance, if the quality is low and you're surprised to see the price is also expected to be low. So it is not, unusual, am I right? If there is a high quality in the company, if the company is providing a good returns, if the company is making business consistently, and if the company managed to grow consistently, then naturally a lot of people stand in the queue to buy those shares, because they also wants to be, having a good returns from a longer term perspective. And sometime and a good quality stocks tends, and most of the time good quality stocks tends to be at a high price, and of course the low quality stocks naturally deserve low price. So this is not unusual. So we call this is a very rational behavior. Good quality stock with a high price, low quality stocks with a low price. You don't see any investing opportunities out of this. I mean, unusual growth opportunities. Of course, here there is one which actually good for investing as well. But we will now talk about irrational market behavior, wherein sometime a high quality stocks comes with low price, very good for a multi-bagger longer term returns. Sometime a very low quality stocks may be trading at a high price, and that is a stock to avoid. And by any chance, if you got such stocks in your portfolio, having seen this video, I'm sure you can make a significant improvement in terms of reducing your portfolio risk from a longer term perspective. Let's see how it is. So let me take about next few minutes to quickly conclude the concept, because sooner you get the concept, the rest comes to you naturally. So the very first thing is put the quality on the x-axis and put the price on the y-axis. So I did this. So by doing this, what I got is now uh, I am going to put it on the 2 scale, okay? And what you see, the gradient from green to red, the green talks about high, red talks about low. Just keep that way. So if you see the price, if I take you through this area, the price green, okay, the price green, this tells me the price is very high, okay. It means a lot of people willing to pay huge for that shares. And by any chance, if the if there is a red section of the price, then it shows the scale shows that the price is very low, the stock is attractive, it is available at that cheap price. Whereas the quality, again, the green shows that's a high quality business, and red shows there is a very poor or a low quality business. Okay. Now let's invite 4 gradients. The first gradient is A. By looking at A kind of business, okay, the A block tells me the price is so high and quality is so good. This is natural, right? So that's what we have seen in the previous slide, that it is a rational behavior. This is how market generally works, am I right? High quality business deserves a high price. Low quality business deserves a low price. That comes under D. It may be hidden to here, but that comes under D. Okay. And now I'm talking about something which is very interesting. Think about it. a very high quality business comes at a low price. Very rare, right? Because you and me not alone exist in the market. So many people naturally looking at such opportunity. So if at all, if high quality business comes at a low price, a lot of people compete to get it as early as possible. So such opportunities may not stay for a longer term, but for some unusual reasons, irrationally, sometime a good quality companies may be available at a low price. Okay, so that is the company. If you get it, you should grab it. And such stocks has a potential of giving you multi-bagger return. Okay, so we call it as a high quality companies with low price. And we have the other one, which is very interesting. And these stocks may be a trending stocks, but known for killing investors' wealth. I mean, the price expectations are so high. I don't know why people are paying so high to that particular shares, but the quality of the business is pathetic. So such companies looks attractive, looks very glamorous, but if you fall in trap, then you get killed. So this is the stocks to avoid. So I've just given you a quick idea what it is. Let me give you some company names to put it into those scripts. If you look at an example, real life example as of today, I will also show you with some tools. We will take screener.in as a tool so that we will compare with each and everything. So if I look at the quality of the business of Asian Paints and Pidilite, straightforward, these stocks are not new to us, right? These Pidilite, Asian Paints, Page Industries, TCS, a lot of companies are a solid business, consistent growth, and but these guys are at very high price expectations. So Murugan, how do you say that the price expectations is high and quality of the business is high? No, let me give you a quick demo about it. So what I now gonna take you with, I'll take screener.in. Okay, I'll take a screener.in. I think this is a fantastic tool. You know, to summarize a lot of fundamental factors, the qualitative factors, and keep it very handy. Definitely, we recommend, right, from fundamental analysis perspective. And beyond this, there is a lot of qualitative things you have to conclude. So even in this particular video, if I recommend anything, why not you can actually take one step forward and do your qualitative analysis a bit more, and if it gives you a solid conviction, then you can take it. So let me actually go and talk about Asian Paints. If I take Asian Paints, you got the Asian Paints here. What happens is if I scroll, look at the stock P and close to what, 97.4. Hope you guys can see 97 point. What this P ratio talks about. This is not a video where I'll talk about the P ratio in detail, but in one line, by any chance, if any beginner looking at this video, so they should be in the position to understand. So in short, if a company makes 1 rupee of profit, and if someone willing to buy that particular company by paying 10 rupees, then that particular person is expecting at least 10% returns from the. If I'm expecting 10%, I'm reluctant to pay more than 10 rupees to buy the shares because the company, after all, makes only what? 1 rupee. Whereas this is a company shows 97.4. No, that 97.4 rupees is what people willing to pay for 1 rupee of profit. Are you getting it? For 1 rupee of profit, people are willing to pay 97.4. It means for this particular company, people are not having not real expected returns. People are willing to pay more to it. So why someone is willing to pay 97 rupees whereas the company is making only 1 rupee? Maybe the traders are expecting a big growth from these companies going forward, right? So I don't want to get in detail of that P ratio, but I want to tell you one thing, that this reveals that traders' expectations, investors' expectations, market expectation. The market expectation is so high. A lot of people are willing to pay more when compared to other companies. Higher the PE, higher the expectation. Lower the PE, lower the expectation. Keep it simple with this now. So now you know Asian Paint is trading at 97.4. That's a very high expectation PE at this moment. So that's why we said Asian Paints price expectation is put it on green, but why the quality is also at green. So now go and let's look at the quality aspect of the business. If I go down, okay, now there are a lot of factors involved. Of course, if you wish to master yourself, there are a lot of ways you can do it. I can even guide you through as due course of the. But if you look at the ratios here, you see something called the return on capital employed. And if you look at the return on capital employed, you see the number is almost consistent at any point of time. It is above this 25%. So the business is actually doing good. Either they get money from uh, lenders, or either they get money from shareholders. Their returns for that capital invested is very good. The capital employed, very good. So this business is actually doing good. The quality business, a lot of other factors can also be used to justify the quality. But this return on capital employed is very favorite and a very common ratio, which gives you a quick quality check. So now we know Asian Paint is a solid business and with high PE. Is it unusual? No, no, it is very natural. This is how a good quality company is, and people by standing aggressively on the queue, they're willing to pay more. It's natural, right? Likewise, Pidilite. I if you click on Pidilite, at Pidilite Industry, look at the P ratio again, 94 point, and look at the return on capital employed. About last 10 years, it's very clear that the kind of the ratios what they have, those two always about 25%. I hope you got a rough idea that why Pidilite and Asian Paints are, and what to do with this company, Murugan. I will actually let you know. First, let's put it into the quadrant, and then you get to know what to be done. Okay, I'll talk about it as well. And look at this counter, Suzlon. The other one is Unitech. And if you look at the Suzlon and Unitech, these companies are having a, these companies are actually having a solid, you know, track record of being underperforming for about last 10 years. And with that underperformance, now a lot of people lost their hope, and people are not actually paying much to it. And of course, they are not doing much of. Why not these guys can turn to be a multi-bagger? Very, very difficult to find these. These guys are actually kind of dead stocks. Out of 100 companies, maybe one can bounce back, 99 doesn't come, but that one may not be good enough to reap you that 99 return. Rather, I tell you, somewhere you can actually look at it for a multi-bagger. But these stocks are actually known as that. They kill your time value, they kill your patience, and you invested with a lot of hope, but they remain at the same level for over a period of time, and you don't get such return. So the company what I'm actually talking about it now is actually the Suzlon and Unitech. I hope you got this clear. So let's go back to look at the other company. This very high quality business, but the prices are at affordable, attractive prices. BEPL, Mahanar Gas, a lot of companies, a lot of companies. But the reason why the prices are low, in spite of the quality is good, maybe the market anticipation of near-term growth may be low. These guys may struggle a lot in terms of providing their sales growth or margin expansion, or maybe the value migration may be there. So we need to look at the qualitative aspect as well, not just the quantitative alone to conclude. But the objective of this video is to talk about these two factors, price and quality. I hope you got it. So I'm talking about BEPL. Okay. What is this company, Murugan? What exactly? I'm not talking about the qualitative aspect. Now let me actually get in detail of quantitative here. Just hit it. Okay. So Bansal Engineering is engineering business. And if you look at this business, P ratio is only 5. If you look at this business, the P ratio is only 5. 5 point. So what 5.26 indicates to? For a 1 rupee of business profit, the shareholders are willing to pay only 5 rupees to buy the shares, right? And this company, as a size, it is a small cap company, about 2,300 crores. So such high business, high quality business, low price, and if it happens to be, small cap companies, we have to take a lot of efforts in order to confirm the qualitative aspect of the numbers. We have to verify the integrity of the numbers. We have to do a little more exercise of forensics. But as per this 4 grades, this P ratio is very cheap, right? It's only 5. So when compared to Asian Paints, these companies. So let's go back to see. The other one is quality has to be high, right? So how do I know the quality is high? So again, go back and see, return on capital employed. See, I am now referring only return on capital employed, but few more things can also be seen towards the end of the video. I'll talk about it, what more factors you guys can look. But return on capital employed is, look at this at the early years, like maybe around 2010, 11, 12, 13, 14 was not great, even 14, 15. But from 16, you see there is a shift in the business. And from 17, 18, 19, 20, 25, the business is actually making something about 25%. So the business qualities have improved drastically. Go and look at the charts now, how they performed in maybe about last 10 years. If I hit it 10 years. Okay, so solid, you guys can see it is pretty flat till 2014, 15. But from 14, 15, they witnessed a lot of things. But of course, there was a kind of correction. And this business may be kind of seasonal. So we have to look at the other factors as well. But on these two metrics, the P ratio is very low and return on capital employed is very high. So as far as this stock selection criteria is concerned, this comes under a very interesting quadrant, that this is a stock maybe gives you a multi-bagger opportunity. Considering this factor alone, with a lot of other factors can question this ability. I hope you understand. And there is other stock called Mahanagar Gas. So let me do Mahanagar Gas a bit later, along with few other factors as well. Let's look at the other one. The quality of the business is so bad, but we don't even know why the market is paying so high. That sometimes proves the market can also be inefficient. It doesn't mean market has a lot of expectations. I know that the market is having a lot of expectations, but it become a point where it become unjustifiable expectation for the. And if the business is so good, no problem. Okay, if the business is not delivering to the capital what they have in the business, then it questions their ability. So let me talk about a couple of company name. One is Adani Green, the other one is Brigade. If you look at Adani Green, I'm talking about 2022 in the month of April. This stock is actually skyrocketing. Almost everybody must be aware of it. The stock every day gives favorable returns. Every week it gives return. Every month it makes returns. It in fact made Adani, Gautam Adani, to become a top 10 in the Forbes list. This contributed significant to the many people wealth. But my question is, such a big business, how much value are they creating inherently from? So the market has a lot of expectations, no doubt about it. But if they are delivering good in business, if they have a proven, if the number talks for it, then this would have got into the first grade along with Asian Paints and Pidilite. But very surprisingly, this quality of the business is not so. The price what it got, it doesn't justify why it actually quotes it. And let me give you a number again. Let's go back to screener and search for Adani Green, right? Green. So if I go for Adani Green here, okay, what it actually comes is, look at the P ratio, what it got. The P ratio is 1090. Wow, what is it? This is quite, of course, it's too early to take these numbers, but because they were not into a series of making money at this moment. They were just building up their infrastructure, this and that. But like this, in 2008, we have seen Reliance Power. When Reliance Power got into IPO, it was heavily oversubscribed and with a lot of expectations. Okay, and sometimes I myself ask a question: is market is cool to pay? There must be something market is expecting, but you don't believe me that with just the presentations, if one raising fund, out of thousands of company, maybe one company may exist. But if you believe that this is going to be that one company, then that shows your biasness towards the company. Just be fair about the probability. Look at the P ratio, that this guy is actually quoting 1,000 times for what it actually earns. It is so unfair. There are a lot of companies, a lot of good companies available at a better price. Why not? You can actually go with them. So over and above, if someone actually growing for this, it shows a mere greediness. Look at the chart price. Like, look at the stock. It actually becomes crazily, again, you see the business is, the stock has given multifold returns in a very short span of time. So we just need to know how and where with this. And if you look at the return on capital employed of the business, it's 4%, 5%, 8%, 11%. That seems to be unfair to me, am I right? That seems to be unfair to me. Let's go back to screener again. Let me take another company as a comparison here, Asian Paints. Okay, and look at what Asian Paint is quoting for a 1 rupee profit. People are paying 97 rupees to buy. Whereas if you look at Adani, people are actually paying even more. Am I right? We see it as people are paying 1000 rupees. So there is, if you see among Asian Paints and Adani, people are paying so much, people are having more of expectation. Let me justify with one more factor. Can you see what is the market cap, what is the total size of the company? It's close to 5 lakh crore at 4.5 lakh crore. That's a market cap it got. And kind of the the revenue, let's look at the the profit yearly. Let's look at the profit yearly. The kind of profit what actually they make is close to 4,000 to 3,000, and the kind of net profit what they make is just close to 500 odd, plus or minus. So that's a kind of, and they don't have a history to justify anything. So it is more like kind of prototype, from the perspective of other companies standing at 5 lakhs and 10 lakh crore. So if I look at the Asian Paints, if I look at the Asian Paints, Asian Paint is only 3 lakh crore business, whereas the Adani Green is 4.5 lakh crore business. Look, Adani Green is quoting at way higher price. I don't know why, but look at Asian Paint's profits. If I look at the Asian Paint's profit here, it the sales is close to 30,000 crores, whereas this guy stands at 4,000 crores. So the business what this guy does is 1/10, whereas what they charge is 10 times. That shows that the irrational behavior of Adani Green. So I hope needless to justify more and look at the profits what they make it is. So let's quickly move forward. So Adani Green, Brigade, a lot of these guys are actually not justifying for the not for the price, and the business is not justifying for the market expectation. So these are the stocks. So what to do with this company? If you see any company with high price and high quality, okay, what to do? See, it is very natural, very easy to see such stocks, okay, like Asian Paints, TCS, Page Industries. A lot of companies you can count on it, and very easy to recognize them, okay, because they are kind of a blue chip and they have a very consistent track record. They are not known for overnight returns in a matter of short span of time. Okay? But remember one thing, you are paying very high price to buy these companies because of the competition, right? People are paying more, and if you wish to grab, you have to pay more to get it. So don't have much expectations, but most of your portfolio generally occupied with this guy because they are a solid business. So if anything goes wrong, these guys defend. Being the business leader, they can handle it really well. So these companies, although you pay more, they don't give much returns. These guys are the reason why you are getting a passive returns in your, but they work very well in terms of hedging your portfolio, taking care of it. So in these grounds, it is very important to be aware of it. And if you look at the business with high price and low quality stocks, these guys provides a lot of excitement. It tells you, like, sometimes people say, why not I buy Adani Green today? Murugan, instead of watching your video, if I buy Adani Green, half an hour later I make more money. I know that companies like this provides a lot of excitement, not just companies in stocks. Stock market I'm talking about, share markets. Even if you go out of different asset class like Bitcoin, a lot of cryptocurrencies where people talking about it. See, if something doesn't have the intrinsic value, and if it still runs just because a lot of people running, and that's gonna be a classic bubble when it busts. Okay, now it's if too early, and if it gets early, not much of problem, but as it gets later and later and later, it can cost many people. And these companies creates a lot of excitements, like, you come buy tomorrow, you make money, and by making money you will again buy, you'll make money, again buy, you'll make money. You buy till you get killed by this company. So this company eventually one day start killing people. Very difficult for them to justify the returns. Remember, the Adani Greens got a very low participation, very low float in the market, is what I suspected. Maybe the reason why it is actually going up. So it may not deserve the current valuation, is my personal opinion about it. And a low quality, low price and high quality business, very, very rare to see. Very rare to see. See, if at all, if it exists, before even posting this video, I'll try to grab them up. Right? So everybody must be interested, and eventually the price tends to slightly get higher and higher. But some stocks comes into the picture. Maybe for some reason, let's say I talked about Mahanagar Gas, Coal India, Indian Oil, a lot of government sectors, high dividend paying stocks. These guys comes into the picture. Like sometime these stocks may not have a growth potential. Maybe they may have some other problems as well. If you look at the details of qualitative analysis, so real high quality business with low price is very, very, very rare to get. But if you find it, go and take a significant portion, so that you whenever you got some money to pump for a lump sum, go for it, because these stocks are potential to provide multi-bag returns, because the current price doesn't it's trading at cheap, right? Is what I said, low price but a very good quality business. So when it comes into the limelight, then it will actually show a real face, then it will start running up, gives you a good return. These stocks, buy, look for a multi-bagger returns. But I'll tell you one interesting way to buy this lot. Companies like ITC, companies like ECS, okay, these companies also are high quality business. Maybe for some reason they may have some factors. Let's say the government increases the cigar tax, ITC, okay, and the Americans playing with immigration policies, the TCS. And if something troubles their business, for such news makes the price to temporarily slash. Am I right? The market sentiment may not be really great on the day. That is the day you get these stocks much better prices. Let's say Russia attacking Ukraine and of course creating a lot of geopolitical tension, this and that creates a crude price impacting the Asian paints. And if Asian paints got at much lower, no, I don't mind. These guys are leader in their industry. Be it ITC, TCS, Asian paints are leaders. So if crude is actually troubling the Asian paint, not only the Asian paint, a lot of other companies, of course, it affect the business. But when compared to other business, Asian paint is good enough to handle that particular business. So it's they know how to pass on to their burdens to the next layer so that they can still continue to have some return. It's good to be with such companies, but whenever the opportunities like any not directly connected with the business or value migrations, but if for any short term crashes, maybe invite you to take advantage of buying those companies. And what to do with this, Murugan? Something called very low quality companies with these companies are kind of a dead stock. If you buy these company, you will sometime feel that, Murugan, I buy a stock, but the stock has not given me any returns for 3 years, 5 years, 10 years. Sometimes it gives you returns and it makes you to watch, and again it goes back to the same area. Kind of in long run, you see, because the business inherently not making money. How come shares alone make money? If a share start making money, then it become irrational behavior of highly priced and low returns, and then it becomes a radar for many people to dump it. And so these stocks may not, unless otherwise the business makes business. If the business doesn't make money, shareholders will not make money. If quality is not good, definitely that stock, although it is a cheap, don't go for it, because sometimes you feel that your money simply got locked. I hope you got some reasonable factors. Let me now look at a little more factors about it. So if it is about price to earning ratio, if it's about expectation, you can, in this video I was talking about only price to expectation videos. Okay, but there is something called price to book value, price to sales, and a lot more you can definitely consider. And if you wish to know something about quality, in this particular video I was talking about return on capital employed, but you can also look at capital turnover ratio, profit, net profit margins, or free cash flow. What is capital turnover ratio? Is it's actually about how good the business makes sales out of their capital, like how much volume sales happen for given capital. So that talks about the ability of sale. Okay, and net profit margin talks about how much out of sale the business managed to get it back to the shareholder, right? So that talks about net profit margin. Out of the profit, how much they managed to get in cash. So if it is a cash making machine, then you get all four positive ratings. That's a good business model. Okay, so what next, Murugan? Okay, I'll tell you one thing. If you simply watch this video and if you skip it, you don't get anything of it. What I actually recommend you take the quiz. I'll do this quiz one for you, and if you find this quiz, what I take is actually good enough for finding a stock, definitely don't hesitate to do it. Okay, let me try this for you, and then you understand what it is. So if you wish to take the quiz, what you have to do is, we have just taken efforts to come up with this, not just about. What you guys can do is just go to EQSIS.com, and if you see there is a training, investing, trading tips, research tools, and you see something called quiz, no, The very last option is the price versus quality. Can you see this price versus quality? So take my head. That, yeah. And it takes you for this quiz, no? Let me tell you what is this. It is asking you select some company. So you can choose up to 3 companies here in order to do this work. So up to 3 companies. If you have only one company, you can limit yourself to. So now I'm interested in, let's say, Mahanagar Gas, and I'm interested in, let's say, TCS. Okay, TCS. I'm interested in, let's say, okay, you take these companies, you're getting it. Let's hit it now. So if you select these companies, and it is asking me what is the PE ratio. So answer these questions. By answering these questions, you get a better understanding, like what what this is all about it. So what is PE ratio of MGL? I think it is real PE ratio. If you don't know, just go and hit it and type here. Uh, so if you look at MGL, the PE ratio is what? Stock PE is close to 12, right? 12 times. It's not that very high. It is between 10 and 30. Am I right? Okay. Then some. What is the last 5 years ROC of this? So again, let me go back and see. The last 5 years ROC is what? The 27, 20, 37, 37, 37, 34, 30, 33, 30. Like, that's interestingly, any point of time, they were able to be about 25%, not just average 25%. They're always above 25%. Very interesting, a good business. Okay. And the P ratio is actually attractive. No, this is why not? This is a good company. So if you ask me, this company is available to me kind of high quality business at a low price. So high quality business, a low price is very interesting, no? Very rare to get it. But Murugan, like this, a lot of companies there in the government sector. There are a lot of companies having, let's say, Coal India. A lot of companies, people are doubting their ability to transfer the next 10 years growth potential. People are also considering the value migration, but the number so far is actually good. So definitely the qualitative aspect need to be taken care. But considering these two factors, it is the high quality. So what is the action to be taken? That's the next question of this quiz. That's the beauty of the quiz. So what to be done? See, this is a stock. I'm interested in making the lump sum because the stock is already available at a fair price to me. And nothing wrong in lump sum, or even if you wish to have a systematic price. But this is not a stock to avoid. This is not a stock to sell. So either you go with the systematic investment or a lump sum. But since the value is very attractive, I don't mind going for a lump sum. And then we have selected Suzlon. No? So it is again asking me about the Suzlon. So if you want to know about Suzlon, then I have to go to it here. It's Suzlon. Okay. And if I hit Suzlon here, Suzlon's 11 rupees, and the P ratio is negative because they're not making anything out of it. Okay. So I will put it this way: the P ratio is less than 10 or negative, which is in. And return on capital employed of this business is return on capital employed of this. Look at this. It's nothing almost just 1 year it made 52. Otherwise, did nothing. So it is not just on average; it's below 25%. So it's a low quality, but what applies is low quality, low price, which is also rational. So this is not getting much of my. And what would you recommend? Like, not recommended to buy. Even if you have a stock, better to sell it. Okay. And then what is the P ratio of TC? What is the P ratio of TC? So P ratio of TCS is let's have a look. P ratio of TC, right? It is. And if you look at this, it's 35. Okay, the P ratio of TCS is close to 35. Answering that question here, I should say more than 30. So the price expectation is quite high, but this is lesser than Asian Paints and Pigments. And for the last 5 years, return on capital employed. What is the return on capital employed for the last 5 years? You see the ratios here. You see, it's always about, I can say, even 40%. No doubt about it. It's always about 25%. And then how do I justify this? It's a high quality, but a price is reasonably high or moderately high. Okay, but Asian Paints, Pidilite, Page Industries, these guys are very high, but this guy TCS is really high. And what would you recommend for TCS? At TCS, I recommend you to go for systematic investment, because whenever, let's say if now as US cutting down their immigration policy, something happened, and if the prices are getting lower, and then of course not only the problem for TCS, IT, Infosys, everybody, and of course the world can't live just by ignoring Indians with respect to the IT business. So they know how to handle it well. So because they have proven themselves for last 10 years, 20 years, why to doubt just by looking at one incident? So whenever I see there is a shortcut in the TCS price out of sentimental gap, so I would wait for them to buy. That day I buy lump sum, not today. So today is a systematic buy. Okay, so I hope you got some rough idea about it. So that's how the job is done. So by answering this question, you got some rough idea. See, this is a quiz. We are not going to give you feedback, but this quiz gives you a kind of chance to work out your companies and apply one after one, so that you get some fair idea how to apply them in actual market. So hope you guys found it interesting, that this quiz can definitely help you out. So see, the fair amount of efforts been taken from our side in terms of making these things available. But remember, we can even give you feedback. So such quizzes we will come back a bit later. And by any chance, if you wish to share any of your stock, falling into to this practice, which is quality and expectations, post it in the below comments, and you see what others were also talking about it. Go and check out what others have actually talked about it in the comment section. So if you have anything more to add on, or if you have any points which you want to add upon the companies, whatever I talked in this, feel free about making a points. We will actually collectively interact and discuss about it. Okay, because the support what you guys provide by collectively participating in the channel helps us to actually stay motivated and keep coming up with a lot of interesting things. And of course, this is purely from a longer term investment, nothing to do with technicals or short trading. And if you wish to know, if you really want to learn the whole aspect of fundamental analysis, I'll definitely recommend you guys to have a look at our website. So if you go to equisis.com, what you guys can get is training, investing, trading tips, research tool, quiz, and dog. Am I right? The very first one is training. The beginner level this course is what we recommend to most of the people, because even if you are absolutely new to trading or investing, doesn't matter you are talking about trading or investing or fundamentals, futures, nothing. If you're new to it, if you have a trading experience less than 2-3 months or 6 months, or even about less than a year, if you wish to learn from the scratch, you're okay to unlearn and then getting it right, understanding the trading psychology. If you really wish to start from the scratch very professionally, we recommend this particular, because this is a very interesting course, because this just about weekends, a Saturday and Sunday, 9 to 5, but you get a solid understanding in the market. So that's a very solid program we recommend. Not just about a 2 days program, and we also provide a kind of 30 days, like whatever the quiz you have seen. There's a lot of interesting quiz we have on top of not just a quiz. We have a checklist, some sort of commentary work. So the public participations, like you can agree and disagree with other people. What's it? A lot of exercises were there as a part of the tool. And you also get a complimentary program, but if you wish to have a first time trading experience, you can actually consider it. Otherwise, 1 year. That's but this is not what I'm talking about it in this video. So what I would recommend you, most of you, is if you wish to master yourself on the fundamental analysis. This is not a very advanced. I didn't say it's kind of advanced to intermediate kind of a program, and I'm sure the what I'm recommending you is fundamental analysis in detail. And of course, this program will be delivered by the person from a fundamental from our team. Okay, because I'm currently practicing technical analysis, so I'm more involved in the price actions, open interest analysis, option chain. But if it is a fundamental analysis, Shripati from our team may be addressing you most likely, and he will actually go in detail of those numbers and how do I do this forensic, and we make this a 1 weekend or a 1 day session, but that will be very interactive, lively session specifically about long-term investing. So if you're talking about only a kind of longer-term investing, then maybe you can consider this particular one. It's a very good program. I can definitely recommend. So I hope we have given you a fair, idea that how you guys can actually even learn the advanced concepts if you wish to learn. Okay. The last but not the least, if you wish to, if you wish to have our guidance in building your longer term portfolio, reach your financial commitment, okay, we can definitely recommend you to go for Access Invest. Because if Access Invest, you can find it in the same way, like, if you go to Access homepage, you see trading, and the next one is investing. In one click, you get to know this Access Invest, and in 3 clicks, you can actually make your monthly investment. So this is not about letting you know the stock. Like, TCS, we already told you. Asian Paints, we already told you. We already told you Pidilite. So, but we keep reviewing these stocks on a very close note, and you get to know the number of quantities you have to buy for the given amount. So if you wish to subscribe, it actually asking you to subscribe. Just by paying 999, you're actually jumping inside. Even if you wish to invest weekly 50,000 rupees, you can, using this plan, you can do it. Okay, like, you're investing close to 10 lakh rupees maybe, or close to 20 lakh rupees, or even you invest 1 lakh rupees, your cost is just about less than a percent of your investment. This saves significantly over the traditional mutual funds, but you are investing directly in equities. A lot of advantages are there. Coming back to the moment you wish to subscribe, it'll ask you how much amount you wish to invest. Let's say if you wish to invest 25,000 rupees, okay, and if you start investing, if you wish to hit it, and if you wish to start, then of course you can complete the one time fees. And of course, if you want any coupons, uh, just to motivate you, since you are watching this video till this moment, I'll be sharing a coupon in the below description, and you can find the description. But we make those coupons generally valid for very limited days, so you can find one coupon, interesting coupon, maybe available for you to subscribe it. What you guys can do is, using that coupon, you actually, probably you can save a couple of more hundreds. Nothing wrong. And if you find this is very good, don't use the coupon and directly subscribe it. But this is actually good for you to, somehow get started. And by subscribing, that what you get for 25,000 rupees, what shares you have to buy, in a way that we kind of balancing that, a high quality, highly priced but stable for business from a longer term. That is a business proven to be providing less shock to us. So be with them with the majority. So we do a kind of portfolio diversification, everything, and so that you get to know the number of shares, and the price at which you can buy, and you get a reminders from Telegram and everything, so that it becomes natural for you. So hope you got the solution through this particular video, and I hope the time you spend, maybe about 25-30 minutes, justified. I hope you will take up those practice. If you seriously find this video is good, if you see this video is good for any beginner or any investor should know about it. Okay, and remember the kind of business what I said, like Asian Paints, Pidilite, TCS, ITC. These are all actually not like very difficult for people to get it. Anybody can get it. So all they need to know is they fall in which quadrant and what should be their realistic expectations. So do share this video to the needy people. Okay, and if you see that this video can definitely save your brother or a sister or a neighbor or a family member, or you may have some the social group which can actually get benefited, to share the video, because by which you are also helping us and encouraging us to come up with a lot more interesting videos, because we see that channels being viewed by so many people. We'll be a little more serious about posting those videos. Thanks for all your time and being patient with me till this moment. Signing off. Thank you.